Silicon Valley Bank's Northern California technology banking practice. And I'm delighted to be here today with Omri Dotan from Wisor.
Hi, everybody.
At SCB in the Valley, and I think kind of across the globe right now, there's a lot happening in fintech disruption. And I can honestly say that I haven't heard of a company that's doing exactly what Wisor is doing, which is more what I would categorize as a next-gen kind of mortgage advisor. But why don't you start off by giving us a little background on the company and how you identified the problem and how you're looking to solve it.
Sure. Hi, everybody. Thank you for having us here. So I'm Omri, founder and CEO of Wisor. We are a fintech company, and our goal is to basically try and help borrowers who take loans, big loans, mortgages, look at a loan as an investment and offer tailor suits solutions instead of plain vanilla loans is happening today. We were founded in 2014. I have a background in mortgage consulting. I worked 4 years at a bank and then 2 years as a mortgage broker in a private consulting firm. And there are a few gaps. There is a huge asymmetry of knowledge and power between the people who want to take money and the people who give the money. And we're trying to balance that gap and bridge it by offering end users, borrowers, software solution that optimizes the way people choose the loan, but not just choosing the loan and taking it. We want to monitor it and manage it throughout the lifetime of the loan until it is fully repaid. And we use algorithms for optimization. We use machine learning, predictive analysis, and we save a lot of unnecessary interest for our borrowers throughout the lifetime of the loan. So that's basically what we do. Yeah.
That's great. And so, I guess one of the most surprising stats when you and I were talking that you mentioned was that 93% of people that have a mortgage lock into a 30-year fix. 80% of people end up paying that loan off early. I found that fascinating, one, because I've owned multiple homes and I've never locked into anything longer than the 7-year arm. But how do you guys think about it when you're trying to save a consumer money? Clearly, I think people oftentimes when they're moving into their home, they view this as a home that they're going to live in for the next 30 years. Oftentimes that ends up not being the case. How does Wisor help us as consumers deal with that?
So yeah, you're right. Now, 9 out of 10 borrowers take plain vanilla loans. They put all their money in one rate type. Usually it's long-term, 20, 25, 30 years, and they forget about it. And 80% of borrowers actually repay their loan between 6 to 8 years, whether it be because we upgrade to a new house or something happens in our financial profile that allows us to do that. So people don't take that into consideration and take plain vanilla loans. And so the economic mistake here is double. First of all, you take all your eggs and you put it in one basket. And second, you don't monitor your loan, which is the biggest decision of your life. Mortgages are the biggest loans that people take. People take, on average, 1.5 mortgages in their lifetime. The lucky ones take more than one, but usually people take just one loan. So our goal is to help people change the way they perceive the loan and look at it as an investment. Just like investing money, your goal is to diversify the money and build a portfolio that fits your needs, your preferences, and also monitor it. So that's what we're trying to do with the loans. We want to take principles of investment management and combine that with optimization technology. And in that way, basically, we want to save money for borrowers. There's a lot of money that's left on the table, and that's where we're trying to save.
Right. So you talk about looking at it as an investment and kind of changing consumers' behavior as going through kind of versus how they would normally go through this process. One of the things that you also talk about is kind of this concept of hybrid loans. What does that look like with the Wisor platform? What does that mean exactly?
So a hybrid loan means basically dividing the mortgage, not taking it in one part, but again, looking at it as an investment, building a portfolio that fits me or you or anyone in this room. Anyone here has a mortgage by now? Raise your hand. Do you have a mortgage? Do you have fixed rates, long term? There you go. So our goal is to look at it and say, okay, let's take a part of the money and put it on fixed rates, but also a part of the money on adjustable rates. Some of the money can be long term, some of the money can be short term. For example, I want to pay more money in the first few years of the loan because I still am married with no children, but within 5 years I'll have two kids and I can pay less on my mortgage. So I want to take all that into consideration. Do I have additional debt? Do I have future money that will be available to me that I can use? Do I have savings that are invested at the moment? Just another example, if I have a great investment plan that I get 8 or 9% yearly ROI, there's no reason for me to pull that money out and put it on a home as down payment. I should take a larger loan, enjoy lower rates, and still make money. So these are concepts that borrowers don't think about, and we're trying to basically build a profile, learn who you are, and build you a tailored suit, which means combining adjustable rates with fixed rates, long and short terms, and building a tailored suit for you.
Great. And I guess one of the things that I would have a question on is this, it sounds like it's more a SaaS platform where you engage with the customer kind of throughout. So after this initial engagement, how does that kind of evolve in time, and how do you plan to kind of maintain that customer relationship after the fact?
So the first step is taking the loan. That's the point of sale. But now we want to build a relationship with the borrower, and we want to basically do the work for you. We want to monitor the loan, manage it for you. If there is a refinancing opportunity, we want to let you know about it. We see what was planned and what happens actually, and adjust the mortgage at any given point until the loan is fully repaid. Our goal is to be fully integrated with the lenders, which means you as a borrower don't need to move. You just need to click a button, choose the final lender that you get the best rates for according to the structure of the loan that we already found is the best for you. Take out all the hassle of comparing price offers and trying to figure out how much am I going to pay for my loan and is it a good time to refinance or not. We want to do all that as a platform very simply for borrowers until the loan is completely repaid. There are additional layers here, such as insurance, for example. People pay insurance, but they don't know that they can lower their insurance policy because the property, the loan decreases. And again, this is something that we want to help you save money. There's a lot of money that can be saved here.
Great. So before I open up to questions, I see a question already that we got 2 minutes. So 2 minutes ago. So before I open a question, just quickly, when did you launch the product? How many loans have you actually gone through this process for? Some of the key highlights in terms of stats.
So we launched in Israel a beta site January this year, and within almost 10 months, we checked approximately $40 million worth of loans. That's about 140 million shekels, over 150 unique borrowers, and we saved these people 7 million shekels in unnecessary interest. That's about $1.7 million of unnecessary interest that we saved in Israel, which is a very tiny, tiny market. If we look at the numbers in the States, just in 2014, residential mortgages alone were over $1.3 trillion. So there is a lot of money that can be saved here for millions of borrowers. If we take 2008, we don't believe we can prevent 2008, but if software like us existed back then and people took smarter loans and safer loans, the foreclosure rate would be lower, the default rate would be lower. We wouldn't save everybody, but we would save a lot of people from losing their homes.
Any questions out there? Yep.
What do you mean? We compare price offers that people get from lenders before they come to us. What would you pay if you would just go by yourself or even use a broker? We have people that use brokers, pay thousands of dollars, come to us, and we still fine-tune their mortgage and save their money. So compared to them, we save $1.7 million. Great question. So for the borrower, today mortgage brokers take a percentage of the loan. It's approximately 3% of the loan. Our model is fixed fee. We don't care if the loan is $1 million or $20 million. We ask for the same price. That's for end users, but we also see ourselves working with mortgage brokers on the local level, on the down to the neighborhood level. Brokers know their customers down to the street. And we also want to work with lenders, online lenders, non-bank lenders, lenders who want to differentiate themselves and also offer diversified loans. They can also maximize their profit on a loan. A lender can decide to combine more profitable rate types for themselves to the borrower, and they can maximize their profit on the loan while at the same time offering the borrower a safer loan as well.
Great. Thanks, Omri. Thanks, everyone.
Thank you.